guys, it's Trader CJ from Cross Capital. Today I'm gonna help you guys with a strategy moving average bounce in the Forex market. So when you open your, let's say for example MetaTrader, this is MT5, so I'm gonna help you with a simple moving average bounce strategy. So I'm going to show you a strategy that's easy obtainable and provide good risk reward trades, especially in the Forex market. So when you open your MT5 or MT4 or TradingView or trading platform, you can literally open a chart. For example, I've got the Aussie US Forex pair open here, and I've changed it to the 15-minute time frame, so you can see on the left hand side here. So this can work on multiple time frames or even smaller time frames or higher time frames, but what I've seen personally is on the 15-minute time frame it works very well, and that's my experience in the Forex market. So if we go to insert indicators, you open a moving average indicator, you'll see here it starts off with a simple, but we're going to use the exponential moving average. So let's start with a 200. I'm going to change it, let's change it to a bit of a red, and I'm going to make it a bit thicker. That's the basic start. Right, zoom out a bit. You see it will obviously price moves all over the place, back and forth. Right, so let's insert another moving average. Go to trend, indicators trend, go to moving average. Let's put in 100, also exponential, and you change it to, let's say for example this gold color, a bit thinner, and then we use that one, and also we're gonna add another one. Go to trend, moving average, put in a 50, and let's use a orange red. Okay, make it thin. There we go. So 3 moving averages on this chart. Very basic, nothing to code, and you can look at this. I'm using candlesticks. Right, so look at this for example. So what we need is, firstly we need these moving average lines need to be like divided like this, not entangled like a less flat line type of chart. We need it more divided like the other one, the one I've showed you, because this you can't trade. This is very sideways market, so to get in a direction within this is not easy. Okay, so I'm gonna go back. So we need a trend basically. So this is a downtrend. So these moving averages show you it's a downtrend. So the price, these candles trade below the 200 moving average and below the 100 moving exponential moving average, and also below this 50 exponential moving average. So price trades below it and bounces back and forth, but we're looking for shorts in this. So the one thing is, if you get a touch of this 200 moving average, so for example price trades like this, you get a touch and a rejection candle. Alright, so on this 200 moving average, there is a rejection candle like that, the white candle here, or it can be a red candle. It's a bearish candle basically. So that candle there. So for example, it touches the 200 moving averages, exponential moving average, and it reverses then and closes down here on this level. So what you can do is you go short on this level, on this close or the open of the next candle. You go short, you risk the high here of this candle. So on this it's basically 7.5 pips. Let's make it 8 pips on this, and you can target lower levels. It's 1-to-1 over here, so you get to 1-to-1. So risk reward, basically you risk 1, make 1. So you can risk any amount of capital that you are comfortable with. You risk here, get your 1-to-1 risk reward, or you go to, there is 1-to-2, or the next. This is basically the next moving average. This move down here basically reached almost 1-to-3 risk reward. So some people also trade the other bounces or rejections from the other moving averages, like this 50 exponential moving average, that rejection candle. So it first needs to touch it, then reverses sharply on the close or the open of the next candle. You go short, risk the high of this rejection candle, and you can target lower levels. Nice level to target is then this low here. Takes out that low. It's also a nice target, and you can ride it down if you want. That's up to you how you want to manage a trade. I'm just showing you nice entry levels and a nice strategy you can use. There's also a nice rejection candle, so it's try to push higher for this 100 exponential moving average. Didn't get there, only traded through the 50 and then rejected that. So that's also a nice risk reward, but this is a bit bigger. So that's a sell there if you want to use it. Another sell there, another sell there. This one, you can look at this candle. So it was a bullish candle, tried to push higher, closed a bit down. So that's not a bearish candle. That's that. If you look at this candle, you understand your candlestick candles. That's bullish engulfing basically. If you look at this candle, the previous one, so it needs to be like a proper bearish candle. It needs to show a nice rejection or a wick, a nice large wick on this. If we go back a bit, that's also not as bearish, I would say. And this one didn't really. So you can look at this candle, for example. That's almost a bearish engulfing, I would say. You can use that as a bearish rejection from this. So like I said before, just look for this division in moving averages. Nice to be spreaded like this for the bearish side. This is also sell. I'm going to look for something bullish. So it traded higher. This is spread the other way around. So the 200 exponential moving average is at the bottom, and then the 100, and then the 50. So it's trending upwards. There's a bit of a rejection. That's also a rejection. That's a new day. That's a proper bullish candle. Well, this obviously didn't go through. So, but you can see sometimes it just drops the whole thing. So it drops right through all of this. So you need to wait for a confirmation candle or signal, confirmation signal. So one thing I have done before is just taking the trade based on the touch of the exponential moving average, but the problem with that is you can't identify your stop loss. So the best way is to wait for a confirmation on the reversal of on that specific EMA. So it's best to wait for, like I said, reversal of a candle or any other way you want to confirm your rejection or the bounce, basically. So nice bounce there, nice bounce there. Look for a couple trades. When it's entangled and it doesn't show direction, don't take a trade. So that's what I've seen. It's better to wait for a clear divided direction on the moving averages. Alright guys, so that's it from my side in terms of this strategy. So just a basic strategy. You're going to go test it yourself. Open up the chart, put in these 3 basic moving averages and see how price reacts around it. So like for example, look at this 200 EMA, how the price just bounced off it and just went. So you can see the clear direction in terms of an uptrend or a looking for longs in this period from, for example, from here, this area here up to here. So this whole area you can look for long trades, not shorts. We can see it's a clear direction upwards. And yes, that is basically it. Alright guys, see you in the next one. Cheers, bye.